All right, what is up, tycoons? What's up, traders? Super excited for today's video. I have an amazing video for you guys today, so make sure to stay through, to the end, so you guys don't really miss any of the great charts that I have for you on UNG and Boyle. Okay, both of them are really good. What I want to start the video off is going over the natural gas April seasonality. We're going to take a look from 1997 through 2022, and in that time period, April, the month of April, is 69% positive and 30% negative. So we have about almost a 70% chance that April is going to be a green month for natural gas via historical data. Now I'm going to show you guys that historical data so you guys know that I'm not just making this up. We saw a great start to this possible seasonality push on Friday. Okay, last Friday was a very nice day for natural gas for UNG and Boyle. So we're going to get into it. Again, make sure to smash the like button, subscribe to the channel if you guys are new. I'm putting out natural gas videos every single week. So if you guys are looking for a place where you can get constant updates, this is definitely going to be the place for you. Now, of course, the content provided in this YouTube channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker. So make sure to do your own research. Trading in stocks, bonds, commodities, crypto involves a significant risk of loss and is not suitable for all investors. So read through the full disclaimer. We're going to go ahead and get into the video now. All right. And this is 2013 through 2022. Right. And so this is some of the info that I used to make, come up with those stats. We can see here in 2020 or in 2013. Okay, April was pretty much flat. It was slightly positive, but it was only up about 0.19%. So keep in mind that, okay, that's another aspect, is that just because it's green does not mean that it's significantly green and that natural gas went up 20, 50% every single time. So we're going to go through them. All right, this is 2014. It was up about 5%. 2015 up 2.5%. All right. In 2016, down 1%. All right, 2.5% again in 2017. Over here, 2018, down 2%. 2019, down 4.8%. In 2020, April was up about 13%. And then 21, it was up about 14%. And in 2022, okay, it was up about 26%. Now, there's many factors besides just simply the month of April, okay, whether it's economic, whether it's geopolitical, whether it's a global pandemic, things like that. There's lots of different factors that go into these, but we're just going to be covering this stuff real quick before we hop into the charts. Now, over here in 05, all right, it was down 13%. In 06, down 4%. 07, up 4%. 08, up 11%. 09, down 9%. And then 2010, it was up about 5.91. Over here in 2011, up 4.74. And in 2012, it was up 15%. And then back here in 1997, up about 15.5%. The following year, 98, down 15%. In 99, up 15%. In 2000, up 8%. And then in 01, it was down 16%. The following year, 2002, up 16.75, 03 up 7.74, and in 04, up 4.70%. So all in all, when you do the math on all of these, it's about 70% green. Okay, 69% to be exact, and around 30% red. So, if history wants to repeat itself, just simply going off the month of April, there is a 70% chance we could see a green month in April. Now, that doesn't mean that it has to be those 16% gains, right? It could be flat, it could be 1%, it could be 2 or 3%. So keep that in mind. What we have right here is some of the charts really that I use and some of the strategies that I use to go over trading natural gas. Right. In particular, I really like to look at the MACD and the RSI for any potential signals. So I'm going to break those down for you guys really quickly so you can learn something new. What I look for in particular is divergences, right? So take a look how we have a low and then a lower low right here. So, the price of natural gas is going down, but on our RSI, keep in mind, this measures the relative strength of whatever you're looking at. We have a low at the same point we have a low. And when we make this lower low, we actually make a higher low. So we're increasing in relative strength as the price is dropping, making lower lows. This is known as bullish divergence. You also see a bullish divergence here on the MACD, where the red line is essentially also making higher lows, and we get a crossover, right? So, the MACD, you want to look for a crossover with that red line, and if it crosses up above, that would be known as an entry signal, right? So we have bullish divergence on the MACD and RSI. We see the red line cross up above, and we get a nice push shortly afterwards. Over here, we have a bearish divergence, right? Where we're making a high, and then now we're making a higher high. So natural gas is going up in price, but at those same exact points, we have a high and then a lower high on the relative strength index. This is known as a bearish divergence because we're losing relative strength as the price is going up, indicating we could see some type of downward activity. And then we see the red line cross below the blue line on the MACD. And once you start to combine just these two things simply together, it really helps to give you an edge. Now, no one strategy is going to be 100%. Even combining two simple strategies is not going to be 100%. But what it does is it helps give you a little bit more confidence in your trading and in your entries and exits, rather than just buying and selling simply blindly without using a method. So this is one of my favorite and most simple methods to use. Again, it plays out very well, multiple times throughout the spot price chart of natural gas, right? We see these higher highs. We see these lower highs on the relative strength index. We have that bearish divergence. We finally get the crossover here on the MACD. We got a strong push down here, lower lows, while the RSI is making higher lows. We get a MACD crossover, strong push up. And this has repeated itself multiple times. Now, what's really relevant today is the initial bearish divergence that helped fuel the big drop down, where we had these higher highs, but then we had a high and a lower high. And you can see that I was telling a lot of people to look out for this, right? As we were approaching it and starting to bounce, I said we need to hold this level and continue to bounce up. We don't need a look above and fail, because a look above and fail is significant, because right here, natural gas buyers are fully presented the opportunity to really push price back up higher into that $3 range. And you can see that they failed at doing that. And rather than continuing to flip this from resistance to support, what happened was they actually failed, and we came down to the bottom of the range, but we bounced off of our bullish divergence trend line. Okay, that's really been starting from this low down to this low, and then down to our new relevant lows. We can see that each time we've made these new lower lows, the RSI has made a low, okay, and then a higher low, and a higher low again. So we're going to pay close attention to see if we can actually finally get the real breakout of that initial bearish divergence trend line, and possibly April can give us a push upwards. Or if April is going to be a red month, pay attention and see if we're going to break that initial bullish divergence trend line. If we break that, then most likely natural gas is going to go down to the 187 level, if not break 187 and potentially even head lower. All right, so those are some of the main things that I'm looking at when it comes to the spot price. It's at 2.02 right now at the time of this recording. And what I want to show you guys is just kind of how nat gas performs in that $2 and sub $2 price range. Okay, as recently we were as low around like 193 on the spot price. And so, while we are hoping for some type of seasonality to come into effect for April, what you really need to keep in mind is all perspectives, right, and all data. And if you take a look, this is natural gas below that $2 price range and really just consolidating around $2 or below. We can see here in the past, all right, it stayed there for about 90 days. And over here, it stayed in that price range for about 304 days, around 0102. It stayed in that price range for about 122 days. Back here in 2012, it was stayed there for about 90 days. Okay. And then in 2016, it stayed there for about 274 days. And in 2020/2021, it stayed there for about 305 days. So, you can see it's very volatile, right? Yes, it does bounce sometimes and then come back down. That's why I mean overall, like the overall time period where it, hit that $2 price range. And then once it finally left that $2 price range in the dust, has ranged anywhere from about 90 days, so about 3 months, all the way up to about a year. So, just keep that in mind, okay, is that, we do have about a 70% chance historically of April being a good month. But even if April's a good month, there is a chance that we could pop up and then drop back down into that $2 and sub $2 price range for at least about 90 days up to about a whole year via historical data, right? So if you end up getting some profits or anything like that in April or May, it wouldn't be good. It wouldn't be a bad idea to really protect your trade and put some type of a stop loss or even take some profits, as there is a strong likelihood that we will see it back in this $2 to sub $2 price range sometime in the future over the next 90 days to about a year, right? Because we're really just now entering price in this territory, and it hasn't been there for at least 90 days even. All right. Now, with that being said, here is the natural gas futures 4-hour chart. Now, if you haven't been watching my videos, we've kind of been giving you guys some really, really good analysis. Okay. So we have this overall supply zone up here in red and this overall demand zone here. This is the monthly time frame supply and demand zones. That's why they're so large, but they're really strong and they're really important. Now, initially, we had this rising wedge with a gap down to fill. That's what this blue box is right here. And these gaps, they tend to fill about 90% of the time historically, okay? And you can see that we had the rising wedge. We got a very textbook breakdown, retest of the trend line, and then we came and filled that gap down. All right. And I also mentioned in a perfect world scenario, once you get these rising wedges, it typically is going to take price back down to where the pattern began. And you can see we actually came right back down to our demand zone here. And so the rising wedge ended up playing out fully, right? Now, currently, what we're looking at here is we have a left shoulder setting up, we've got our head, and we're starting to put in a right shoulder here currently at the moment on the 4-hour chart for the futures. Not only that, we had a slight bullish divergence here on the RSI where we had a low here and then a lower low here. So, the futures were heading lower, but at those same exact points, we had a low and then an equal low. So we had a slight bullish divergence as we maintained relative strength, even though price was dropping further, and price dropped further to right towards that demand zone. And we had the bullish divergence. We also have a slight bullish divergence on the MACD where we have a low, slightly higher low. We saw a nice crossover here as well. Okay. At this point in time, we had the MACD cross over, right? And to me, this head and shoulders is forming, and it looks to me like, this is our neckline right here, okay? We touched this trend line here twice. We touched it here 3 times. We closed directly at that trend line. And the last trading day, okay, we actually put in a little bit of a doji right here on the 4-hour chart right at that trend line. So it's going to be really interesting to see, do we see April start off the month strong with a break, retest, and push up higher back towards that 205 area, 200 to 205 area on the natural gas futures. Okay, that's going to be a pretty nice move if that happens. There's no guarantees. Just because a pattern is forming does not mean it's confirmed. Okay, for instance, if we get a look above and fail, all right, that's going to be pretty bearish. You guys can see we actually filled the gap down that we had to fill here recently that I mentioned as well. Once we gapped up, all right, I said, hey, be cautious of this gap down to fill. We ended up filling that gap down. So there was a high chance we were going to fill this gap down. We did that. We filled the gap, and now buyers are trying to push price higher. So we'll have to pay close attention and see, what things are going to do. I definitely recommend that if you're trying to trade UNG, if you're trying to trade Boyle, okay, you need to look at the futures, all right, because those trade specifically off of the futures, by purchasing and then selling and repurchasing the futures contracts. And you definitely need to pay attention to the spot price of natural gas as well. All right. Not all of them are going to move exactly the same. And oftentimes you can find that the futures and the spot price in particular don't really trade exactly the same and move exactly the same. I've explained why in some previous videos. So I won't dive too much into it. Now, this is Boyle's daily chart. Now, if you're not mistaken, or if you don't know, Boyle's been making all-time lows. There's no secret about that. Boyle is down brutally. Okay, and I just want to say that I do offer one-on-one Zoom sessions and one-on-one, kind of private sessions. So if you guys are interested in those and you guys would like me to, just do some personal coaching, some one-on-one time, you can email me at ZachlyTrades@gmail.com. All right, and just send me an email. Let me know who you are. Let me know that you're interested in getting, a private Zoom session, and we can go over the details and try to set up a time. All right. Now, currently we have this bearish channel that we're trading in. I went over this in the last video, and you can see we actually bounced here right off of this bearish channel, very close to that 320 support level here that I had as well. And we're starting to get a slight little bit of a bounce. All right, but we are at the bottom of this channel, so that is kind of expected. Things definitely could continue to come back down. All right, there's a lot of decay associated with things like Boyle. There's also decay associated with UNG. It's just not as extreme, or rather as exaggerated. I have an entire video dedicated to the decay, really going super in depth around the decay on Boyle as well as UNG. It's a great video if you guys are ever interested about that and wondering, about holding Boyle shares or holding UNG shares and what the decay risks are associated with those. There's a lot of myths, and there is also some dangers around doing that. So that's a great video if you guys want to watch that one. We'll get back into it here, and we can see that we have bullish divergence again, right? We have a low, we have a low, we have a lower low, all right? And then we have a low, we have a higher low, and we have a higher low. So we're continuing to make these higher lows, building in relative strength as Boyle continues to fall down lower. We're testing the bottom of this bearish channel right now. All right. And we also have bullish divergence here on our MACD, right? We can see that, we have these lows here, and obviously we have lower lows here, and the MACD is actually in an uptrend right now. And we have some question marks here because the MACD, if you look, the two lines have been squeezing, right? And they're pretty much flat. All right. Now, typically, whenever you see a flat MACD like this for an extended period of time, it means a big move is coming, right? We're either going to get a big exit signal and big push down, or potentially we could see a big move up and a big entry signal. So I'm paying close attention to the MACD on UNG and Boyle. All right. This is Boyle's chart. Both of them have some bullish divergence developing. Remember, none of these strategies are going to be 100% guaranteed. So just because we have these divergences forming does not guarantee. But once we start to add a few things together, like the April seasonality, okay, we have, the bullish divergence on a RSI, on a MACD. All right, we're testing some key levels of support. The futures, we're bouncing off of a key, demand zone on a monthly time frame, on a very large time frame, and buyers continue to step in very quickly at that demand zone. All right, if we go back here again real quick, you can see that this is a 4-hour chart. So, within 12 hours, right, buyers really push the price up way higher right here, these three candles. And then we come back down here again. And as soon as we come down into that area, we wick right back up. All right. So, there's strong demand and strong buyers so far, right around that 165 area, 167 on the natural gas futures. And then we also have that inverse head and shoulders trying to form. We're trying to break the neckline here. So, April is starting off decent. All right. From my perspective, now I'm recording this before the first official trading day of April. But, we are seeing a few good signs right now. We've seen some of these signs before, and both of them have dropped lower. So please manage your risk if you're trying to go long on any of these. There's many ways to hedge yourself. You can also use stop losses and things like that. Okay. Now here, I want to talk about the UNG chart, right? So same thing. We have a low, we have a lower low, we have a lower low, right? We're creating these lower lows, but we have a low, higher low, and then higher low. We actually broke through the initial bearish bullish divergence trend line we had here, right? And you can see we're actually retesting it here currently at the moment. Now, I've mentioned a look above and fail a few times, right? And how that's a bearish indicator. This could be a bullish indicator if we get a look below and fail, right? Because essentially bears are going to be presented the opportunity fully to really push price lower and drive relative strength down and continue to have UNG head towards some of our major support levels here. But rather, if we get a look below and fail, it's going to show that, hey, bears are exhausted. They were presented the opportunity. Rather, bulls were the ones in control. If we end up getting a strong bounce here, that's going to be a little bit indicative of bulls having, potentially having control. Now, we're definitely in a bearish trading channel here as well. You can see on UNG, we're actually testing the top of the range right now. So it'll be interesting to see if we can get some type of a breakout and flip the 17 or the 715 region from resistance to support. That'll be very clean. If we can do that, all right, we have our major retracement levels of resistance up here. These are going to be some price targets, okay, of 789, 822, 830, as well as 870. Those are some of the key areas that I'm really looking at if we do potentially end up getting a breakout. Now we can break out above here. If you notice on UNG, we do have a gap up to fill, okay, right here in this region, right around the $9 price level. So, if we get a strong move and if April happens to be a bullish month, then there is a chance we could end up filling this gap, right? Now we're very far away from this gap right now, so there's a lot of work to be done. So I'm not necessarily too worried about the gap filling immediately or anything like that. It's something I'll be paying attention to the closer we get towards that gap. All right. Now, same thing, MACD has bullish divergence. If you take a look here, the MACD actually curled down much before. It curled down on March 20th, and you can see it was a good sell signal, and we had a strong move to the downside. I think I got in some puts on natural gas like on the 17th, right in this area here. So, those puts are green right now at the moment and are hedging some of my long positions. You can also see 667 was that major support level below 715 that I mentioned. And you can see we kissed it right here with a wick, and then we closed exactly right around that level of 667, the following trading day. So that is a strong level of support. Below there, we have 642, and below there, we have 606. If we break those levels, I'll give you guys some new support levels as well. But for now, these are the major support levels. Remember, 715, 789, 822, 830, 870 are really the key areas up above of resistance that I'm watching out for and paying attention in case we do get some type of a rally. Hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel if you guys are new. I'm putting content out like this every single week, making natural gas videos at least about 2 times, sometimes 3 times a week.